Welcome to the Eurasian Economics. In this podcast, I want to discuss some of the first pushes to de-dollarize. I have in one of my previous podcasts, specifically number 34, discussed some of the triggers that could lead to the world to de-dollarize. More specifically, I discussed two triggers. I laid out two triggers. Right? The first is if Russia actively cuts itself off the SWIFT interbank messaging system. And two, I said if Saudi Arabia or more widely OPEC Plus accepts other currencies, doesn't need to completely abandon the dollar, but to accept other currencies in oil trades. These were the two triggers that I discussed. Of course, this all happened before the conflict, the armed conflict in Eastern Europe, and before the reactions that the West, specifically the United States and its allies, took. And I discussed also in a previous podcast, specifically number 36, that trust was broken, that the credibility of the Western financial system was lost. And this, I said, in my judgment, was a horrific mistake. Does not matter I think there were a lot of diplomatic and foreign policy, foreign relations mistakes, as I have discussed in some of my previous podcasts. But I think if you accept that some countries may have different ideologies or perhaps worldviews that differ from what I perceive to be realistic, that's fine to a certain point. But to make the mistake of seizing another sovereign country's asset, a major economy sovereign asset, and then cutting it off of crucial economic trades, this is in itself basically demolishing the very system from which the West derives its power. And that, I said, was a horrific strategic mistake. Now we see that the rest of the world, the non-liberal democracies, are already taking some actions. So in this podcast, I want to discuss these actions. I want to divide this podcast into three sections. In the first section, I want to lay out what exactly happened. There are 3 points. Then I want to talk about my views on how an alternative system, a de-dollarized global system, could work for international trade. And finally, I want to discuss briefly, because I think this really warrants a separate discussion, the global impact of these activities. And I understand that I said at the end of my previous podcast that I was going to talk about DuckDuckGo, but I guess that's not really that important. I think maybe I will discuss it in a later podcast, because there are some other issues I think that needs to be really talked about after this today's current podcast. After all, it is, to sum it up, it is just a tech firm, just another tech firm that has shown its colors, and it is basically run by people who are really driven by monetary interests, and all the talk of privacy, of secrecy, of trust were all just ways to market itself. Anyway, now let's move on to the content of today's podcast. First, what exactly happened? I think there are 3 points. that are worth mentioning. First is an announcement that the Eurasian Economic Union, which basically includes, I think, Russia, Belarus, and some of the Central Asian states, and China, and they are starting to engage in a discussion on how to construct a international monetary system that can be independent of the system that's basically led by the United States and uses the US dollar as the sole reserve currency. This, of course, at the current stage, I think is really just the start of a discussion. A lot more efforts needs to be made, and I think there's gonna be a lot of different opinions. So which is why I think I would throw in my opinion on how this could work in the next section. Anyway, this signals to us that there are countries who are forming a core in at least launching the initiative to start an alternative. And I think in due time, more members will join in this discussion because the US dollar works for the United States and a little bit for the Europeans, for the Eurozone, and maybe for the Brits, but it does not work for the rest of the world. The second thing that has happened is that the Saudis are studying the possibility of accepting Chinese Yuan for some of its oil trades. And of course, it is opening a large oil refinery in China for its crude oil. This again is just signals to me one of the triggers that I mentioned, right? That Saudi Arabia and OPEC Plus would perhaps start accepting other currencies for oil trade. I think this really is a crack in the petrodollar system, and we already see that BJ, the small clone, is already trying to go to Saudi Arabia and the UAE to talk about these issues. I don't think that the Arab states will be so keen on dealing with BJ because this guy is a clown. The guy is a serial liar, is certainly not to be trusted. I mean, okay, let's not rumble. So that is the second event. And the third event is that Russia has proposed to India that, and India supposedly is seriously considering the possibility of purchasing some Russian crude oil in rupees, Indian rupees, with some ties to, I think, Chinese Yuan. And this is, of course, another step in OPEC Plus to accept other currencies for oil trade. So these are the three things that has happened. And I think these are the first pushes in the world to de-dollarize. Because, well, there is this talk about petrodollar. I think petrodollar, yes, that's necessity. But a more important factor, in my mind at least, has always been the credibility of the US-led financial system. Once the credibility is lost, once the trust is gone, it is impossible, in fact, in money matters. Once you no longer trust someone with your money, it is not possible to again entrust them with your money, right? That's the first principle. Of course, there's the issue of petrodollar, but I think whether it's petrodollar or there are talks about America's carrier groups, carrier task forces. Those are all secondary and tertiary issues. And the primary issue is trust. Once trust is gone, you see that oil producing countries are trying to accept other currencies, and that means petrodollar will be gone. And as petrodollar is gone, as trust is gone, as a lot of rich people from other countries pull their assets out of the Western financial system, the US-led financial system will be less affluent, and the United States will no longer, in due time, be able to afford its carrier task forces. And so, you see, carrier task forces is really just a tertiary issue. All right, that's what's happened. How is it possible? Let me rephrase it. What could be one of the ways that this de-dollarized system, trade system work? Now, there are always a lot of people talk about the reserve currency status as if it is necessary for the world to have a fiat currency as a reserve currency. In fact, this is a relatively new phenomenon. Throughout history, trade had never been conducted on the basis of a fiat currency, aka also known as reserve currency, until Nixon reneged on America's obligations. He defaulted on the promise to exchange gold for the US dollars. So I don't think that there will be really a quote-unquote reserve currency. Instead, I think that we will go back to a pre-dollar system where there will be commodities and gold, in particular, gold and silver, which will be the basis of countries' reserves. And I think that trade will largely be taken on the back of the currencies of some of the major economies. And that could include, indeed, the Chinese Yuan, the Indian rupees, and perhaps also the Russian ruble, and perhaps other currencies as well, once more countries, more trading partners join this system. And this system will have a decidedly different feature compared to that of the current system. And this major difference is that it is no longer possible for a country to run indefinite trade deficit. Because if you don't have the commodities, and if you're not selling other people goods, then eventually nobody will want to sell things to you for nothing. And that would actually, I think, be a healthier system in the long run. And more specifically, I think there is one important issue or establishment or institution that needs to be established, which is a central clearing house for these trades. These clearing house will handle the trades of these essential commodities. I'm talking about, of course, oil and gas, and all the grains, soy, the major food products, metals, precious metals, and so on. And of course, there's gold and a select basket of currencies. And this clearinghouse, I think, will be a new financial center. I think this financial center doesn't need to be a new financial center. It could be one of the existing financial centers, but you know what I mean. It will be a financial center that takes a central role that replaces the role or at least is independent of the role that London and New York are playing currently for the global financial system. In this new financial system, it will be perhaps this clearinghouse that plays the central role. There are some candidates. I think the most obvious one is perhaps Shanghai, although I think it is possibly not going to be Shanghai. And the reason is very simple. I think Shanghai being a jurisdiction that is firmly under the direct control of the central government of China, presents a somewhat of a political risk to some of the maybe not necessarily the current partners who are engaging in the discussion, but perhaps yes, because India, right? I think, but in the future, when you want to attract further partners into the system, Shanghai being firmly under the jurisdiction of the Chinese central government is indeed something that I think can be difficult for some people, some countries to accept. And that leads me to think, and I think also Moscow does not really serve that well in that regard. Again, it is the seat of the Russian central government. Again, that is a difficult proposition. I think rather Hong Kong. I think Hong Kong is a potential new financial center, or it actually is a financial center, but it could take this leading role. It has all the infrastructure, and it has a very well educated workforce. It has a set of regulations that are quite different from that of mainland China and of course Russia, making it a much lower regulate, much more loosely regulated jurisdiction. There are some gray areas. I'm not going to talk too much about that, but you see, it's kind of necessary for a financial center to function. So I think Hong Kong is very well suited to play this role. Another candidate that essentially eliminated itself was Singapore. I think Singapore, being on a very important trade route, part of ASEAN, which I think has a very, very bright future in the next coming decades. I think it's going to be the area in the world where economic growth will be the fastest. It has a very exceptionally well-educated population, workforce. It has a good presence of international community. It just and also it has a very strict rule of law. It could be a good candidate, but Singapore decided, for whatever, perhaps due to political pressure, right? It decided to sanction Russia, and I think Russia has, if I'm not mistaken, I think Russia has put Singapore on the list of unfriendly nations. Russia's unfriendly nations. That essentially means that Singapore will not be one of the candidates. Singapore cannot be one of the candidates. And Russia, being one of the founding members in this alternative financial system, will certainly not agree on this. And I think even the Chinese will not be fully enthusiastic about proposing Singapore, because even though the Singapore business community are closely tied to China because they are ethnically Chinese, I think that there are always lingering doubts about loyalties, where they are placed. And I think there's also a question about foreign influence in Singapore. That means I think Hong Kong will be perhaps the new financial center to be the center of this new global trade system. Now, will this be successful or not? Only time will tell. But it is in the initial stages, and I think some very interesting things can really take place. Now let's move on to the last section of today's podcast, which is the global impact of what is happening. I see there are 4 major global impacts, and I will list them. I will talk about them one by one. First, I think asset prices will collapse. I mean, real estate prices, rental prices, stock prices and bond prices. These things will collapse. And the reason I will discuss perhaps in one of the future podcasts, even though I've touched on these issues in length in many of my previous, much earlier podcasts. I think this is really taking place. And when I see some more news coming in affirming to this effect, I will make new podcasts and then explain this in detail, because I think this warrants an independent podcast. And of course, with a collapse of asset prices, there will be a negative wealth effect. And this will change the behaviors of people's consumption. And all the speculative assets, I heard people talking about watches being able to hold value. I doubt that. I seriously doubt that. No, they will not hold value. Watches used to be something that everyone could afford, and I think they will again be something that everyone can afford. I will talk about that in detail. Secondly, I think there will be a lot of difficulties in this transition period. Whether this new de-dollarized trade system can succeed or not. Because in this type of major shifts in the world, especially with the speed at which this is taking place, we are going to see waves upon waves of disruptions in trade. This is one of the reasons I think why, for example, in China, I think the target of 5.5%, I think, if I remember correctly, economic growth is not going to be achieved. They could massage the numbers and say that it has grown 5.5% at the end of the year, next year. But I doubt that this will take place. I think there will be a lot of disruptions in trade, and but at the same time, I think this is a pain that is necessary. Just like I think there are people talking about the demographic problems in China. I think it is a period of pain that needs to take place for China to reduce its population to a level that is more sustainable given its endowment of resources. Right, we were talking about half of, I think now we probably have 1.4 billion people in China. Over time, gradually, through a lower birth rate, reducing that to 700 million, 500 million, that will be a level that can be sustained with a lighter burden on the ecology, and it can be more sustainable as well. I'm not going to talk about that in detail here. The third global impact, I think, is the end of the euro. I think the Eurozone being, as I've mentioned several times previously already, being one of the most indebted regions, if not the most indebted region with the lowest interest rate in the world, namely it's negative, and with the slowest, unbelievable, the slowest economic growth in the last decade. Unbelievable. I mean, it's slower. The one region with the slowest economic growth, namely, is roughly zero. In a lot of countries, like in Southern Europe, it has been roughly zero for a decade. It's unbelievable. This combination of high debt, negative interest, and no growth, it's really going to be it makes it the least able to weather any type of financial turmoil. With inflation going really, really high and increasing, with the world moving to de-dollarize, there will be a lot of instabilities in the euro. We have already seen in the last couple of weeks the huge swings in the price of exchange rates of euro with regards to other major currencies. I think that this will continue, and I think the longer trend is that the euro will lose its value because the European economy faces the world's biggest challenges, right? Those three issues, plus now we also have the energy crisis. It just makes it very difficult for European economies to compete. And that means that confidence in the euro will be low, and people with European assets will want to move their wealth out of the eurozone. Of course, it doesn't help that Europe is seizing the assets of a lot of the wealthy Russians. That's obviously is going to prompt a lot of foreign wealth to flow out of the eurozone, because people are afraid that someday maybe Europe would just seize their assets. And in this way, the euro will be under the immense pressure. I think the major economies, namely specifically Germany, because German economy is still a manufacturing economy. It is an export economy. It cannot, but at the same time, it also imports its energy and the resources, raw materials. Simply put, Germany is incapable. Germany will crash if inflation remains high. So what will happen, I think, is that either Germany will leave the euro, abandon the euro, leading to the collapse of the euro, or Germany will insist to save the euro, in which case this will be so much pain for the rest of the eurozone that other countries will leave the euro. And so I think within 2, 3, at most 5 years, the euro will be gone. And in this period, if we're talking about in turmoil in global trade in the eurozone, this will be a nothing short of a disaster. I think this will be the Great Depression squared in the eurozone. And finally, there will be some increasing tensions, social tensions in the United States. This is the fourth impact, because as the dollar loses its dominance as the world's reserve currency, I think there will still be a lot of use cases for the dollar. I think the United States will remain an important economy, but it will no longer be able to just simply spend money, borrow money, print money, monetize the debt, and use the borrowed money or printed money to spend on its population to cope with social problems. I think they will need to face these social problems. Whether there will be a good leader that can lead the Americans out of this impending social, I don't know what is widening social to fix this widening social chasm. I don't know what is the good expression here, but you know what I mean. To fix this issue, I don't actually see, because the current political system in America is so toxic that you have only actors on both sides, right? You have AOC, who is purely an actress who answered to an ad because of her demographic traits and because of her acting abilities. They catapult her into a political star, right? This is on the left, so-called left, on the Democratic side. And on the Republican side, you have the likes of Marjorie Taylor Greene, another whack job, actress, not really, doesn't have firm beliefs. I think the only few, in the last decade, from my observation, the only honest politicians in the United States, I think I can think of one, Ron Paul, from Texas. This guy is one. He's a great leader. He has firm beliefs in liberty. He's a libertarian, and I think he also believes in the Constitution of the United States, and he believes in freedom. And I think he sticks to his beliefs. He sticks to his guns. He does not sell out. The other politicians in America, they're all different variants of corrupt. And I think really to find a good leader, someone like Abraham Lincoln, someone like George Washington, I think is very difficult. So I don't know how exactly that issue, the social issue, will be fixed. But I think perhaps as the situation worsens, as you can no longer just simply plaster over it with PR campaigns, information restrictions, and whatever, I think there will be new leaders that emerge. There will be the new George Washingtons, the new Abraham Lincolns that could potentially fix the problem in the United States and reunite the country under the Constitution, which was a beautiful document. But anyway, that's my view. So I hope that you have found some points that I've made in this podcast to be interesting. If you do, please like, share, and subscribe. Thank you very much, and have a great day.